Thank you for being here this evening. We have joined the craft for many reasons. Its philosophy, its history, for brotherhood. And hopefully your experience has been fulfilling, enlightening, and meaningful. Without brothers ready, willing, and able to take on leadership roles and the knowledge and skill to address the challenges that every lodge faces, however, we are doomed. Indeed, we are living in ever complex times with more rules, regulations, and laws that call upon our brothers to not only be master masons, but accountants, plumbers, and property managers. So I'm grateful to you that you care enough to learn about options that just might save your lodge thousands of dollars or protect and preserve its assets. I'm grateful for our speakers, Right Worshipful Al Bryant and Right Worshipful Robert Walenta, for taking the time to be with us once again. Brother Bob is also a past District Deputy Grand Master, past Chairman of the Grand Lodge Insurance Committee, past member of the Grand Lodge Lodges and Buildings Committee, and he's a founder and owner of Walenta and Company Insurance that was established in 1990. Right Worshipful Brother Bob, the floor is yours.
Hello, I'm Bob Walenta, a member of Masters Lodge number 5, and for the last 32 years, the owner and founder of an agency just south of Albany. Let it be known clearly that I am not the insurance agent for Grand Lodge, nor do I represent the company that currently provides coverage for Grand Lodge. Some 20 years ago, I was approached by the Grand Lodge Lodges and Buildings Committee to chair an insurance subcommittee. In that capacity, I had the privilege to travel around the state, visit many districts, and attend district deputy training programs discussing how to properly insure your lodge. The purpose of the presentation is to provide the lodges in the state of New York with the tools necessary to understand their insurance needs and to obtain proper insurance coverage. This presentation is only a small part of the tools prepared for you and your lodge. In addition, I prepared the Insurance Made Simple Guide. This simple guide is broken down into sections designed to explain and help you understand the individual insurance needs of your lodge and the importance of reviewing the insurance policy regularly. It is also designed to assist each lodge in the specific needs of a lodge as tenants of a building, a lodge as a building owner, and the various associations or corporations that have been formed over the years to own our buildings. When was the last time any of us sat at our annual meeting and after the annual reports of the secretary and the trustees, listened to a report of the insurance coverage that our lodge maintains? In fact, I would guess that when the policy shows up, the bill is paid by a vote of the lodge, and the unopened policy gets filed in the secretary's desk for another year without any mention at all. We assume that we have the correct coverage. We assume that the policy that was bought 20 years ago is still exactly what we need today. We assume that because we paid the premium, there is nothing further we need to do. Unfortunately, as I traveled around the state many years ago and met personally with individual lodges, I learned that the old saying about assume continues to be true. Most lodge policies are obsolete or missing important coverages. One of the most significant risks we face is the threat of a lawsuit. Each of us in our daily lives is constantly at risk from a lawsuit. It may be the result of an honest mistake while driving our car, or a loose handrail on the steps to our home. Our lodges and members face these same risks as we go about our work as Masons. When the public enters our buildings for a blood drive, or we have a Bring a Friend program, or when we visit a brother in the hospital, we are at risk of a person slipping, falling down, becoming injured, and then dealing with a subsequent claim. Even our own brothers coming to and from a meeting could slip on the icy front step of our building or trip on a crack in the blacktop parking lot and bring a suit against the lodge. In an effort to help deal with these possible situations, Grand Lodge provides a $1 million general liability policy for the benefit of all constituent lodges and their members in New York State. This very comprehensive policy provided by Grand Lodge has, on many occasions, saved a lodge from financial disaster when faced with a pending lawsuit. However, once again, how many of us knew this policy existed? And more importantly, how many of us understand the limitations of coverage that exist in the Grand Lodge coverage? For example, the following exclusion is contained within the policy. This insurance on fraternal groups will extend to and cover owned building property only if the building is not used or occupied by other organizations or tenants. Again, the coverage is only provided if the building is not used or occupied by other organizations or tenants. Over the years, I have learned of lodges that purchased fire insurance for their building, theft coverage for their contents, but because they knew about the Grand Lodge liability policy, never secured their own liability coverage. The lodge buildings in New York State that are used exclusively by Masonic lodges are almost non-existent. The exclusion says that as soon as our building is used by any other organization, the coverage ceases to exist. That means the Eastern Star, Scottish Rite, DeMolay, Triangle, Shriners, the Oddfellows, and the commercial businesses that may be tenants in our building. But once again, we assumed the policy meets our needs. Most of us, when we hear certain subjects come up, immediately decide we don't understand, or it's too confusing for us to deal with. Subjects such as filing our income taxes or understanding our insurance. It is my desire that this presentation will help you realize that insurance is not that hard to understand. Furthermore, I do recommend that you obtain a copy of the Insurance Made Simple Guide so that the task of properly insuring your lodge will be easier than you expected. For the sake of understanding some basic insurance principles, I'm going to spend a moment and discuss your car insurance with you. Since most all of us own and insure automobiles, many of the simple things we do with our car insurance can be used to better understand the principles of lodge insurance. Every day I sit in my office and receive calls for coverage for cars. The most common way customers refer to their car insurance coverage are with the terms basic coverage or full coverage. Most of us understand the term basic coverage to mean that we just want liability insurance on our vehicle in case we are at the wrong end of a lawsuit. The request for basic coverage, however, does not define how much coverage or how little coverage we should purchase. To take this one step further, I've had clients request the New York State minimum required coverage because the car is old or they don't plan to drive much. Unfortunately, most accidents do occur close to home, and if you've injured somebody else, it doesn't matter how old your car is. The injured person in the other car isn't going to tell their lawyer that because you had an old car, they should sue you for less. We all have coverage in our policies for bodily injury liability in case we hurt someone, and property damage liability in case we damage someone's property. If you are sued for an accident in the amount of $250,000 and maintain $100,000 of insurance coverage, the insurance company will write their check and you will personally be responsible for the balance of $150,000. Then there's full coverage, which usually refers to physical damage coverage or your comprehensive and collision. This coverage assists you in fixing your car when it has been in an accident. This coverage is purchased with a deductible. The deductible is the amount you pay to repair your car, and then the insurance company pays the balance. Deductibles can be at a variety of levels from $50 to $5,000 or more. The higher the deductible, the lower the premium. When purchasing or reviewing your car insurance, you want to maintain high limits of liability. Protect your family in the event of catastrophic losses, and choose comprehensive and collision deductibles that are high enough that you can afford to pay them, but that you can comfortably live with. And that helps keep your premium down. Our lodges are faced with the same decisions. All too often, we purchase a basic policy because we think it is all we can afford. Unfortunately, this puts our lodge at tremendous financial risk in the event of a claim. Most of us have owned or currently own a home. We have all secured homeowners insurance, but how many of us take the time to review and understand our policy? Let me take you through some important aspects of your homeowners coverage in order to help you understand your lodge insurance better. First of all, homeowners policies come in a variety of qualities. Please note that policies A, B, and C are all for the same dollar amounts of coverage, and yet each have different benefits. Coverage quality is based by three standard terms, most commonly referred to as Form 1, basic coverage, Form 2, broad form coverage, and Form 3, special coverage. These are state-defined coverages, so regardless of the insurance company you choose, the coverage is identical. Basic, as it implies, is a rather simple fire insurance policy. There are no frills. It's an entry-level policy, limited in most cases to strictly fire insurance. Special coverage, at the opposite end of the spectrum, provides coverage for an endless list of possible events which could occur to your home, with a few exclusions. Initially, comparing the three policies shown, most of us would probably purchase policy A since it would be the cheapest. But now, armed with the knowledge of coverage quality, we learn that policy C could actually be, at the end of the day, the better buy. The next important item to consider in your homeowner's policy is the coverage on the house. The same would be true with your lodge. Almost all policies require that you maintain at least enough coverage to equal 80% or more of the actual cost to rebuild your home. This replacement cost value is not related to the appraisal the bank did for your mortgage, or the price you paid for your house, or the amount your tax assessor assigned to the property. This coverage is not tied to the real estate market, the economy, and other factors related to the resale value of your home. For the benefit of your policy, you need to consider what it would cost to purchase materials and hire contractors to replace your home as it is now in the event of a total loss. Why is it so important that we maintain the correct amount of coverage? In the event you have a claim, the insurance company will send an adjuster to your house to review the damage. The adjuster has two jobs to complete at your home. The first, and obvious one, is to review the damage and assist you in determining how much it will cost to repair. The second job the adjuster has is to determine the replacement value of your home at the time the claim occurred. The adjuster will then compare how much coverage you actually have in your policy with how much coverage you should have had based on the current replacement value. For the sake of using easy math, let's say you had a $100,000 policy on your home, and the adjuster determined at the time of your claim that your house actually had a replacement value of $200,000. The adjuster will then turn that to a fraction, 100,000 over 200,000, 1/2. This formula of did have over should have is used as a part of every property claim. Doesn't matter if it's your home or your lodge. In this case, the home was insured for half of its replacement value. Why is that important to you as a homeowner? This factor is important because it determines how much of your claim you will be entitled to receive. If you maintain coverage of 80% or more of the current replacement value, then any claims you have on that property will be paid in full up to the amount of the coverage you purchased. However, in the case of the example that I just discussed, you have only maintained half of the coverage you should have had. This means you paid less premium for the policy that you have. Therefore, yes, you guessed it, you will only receive half of any partial losses you may have. For example, a grease fire in the kitchen causes $50,000 worth of damage. Your contractor and the adjuster come to complete agreement that $50,000 is exactly what it will take to repair the damage. But remember, you only maintained 50% of the coverage you should have maintained. Therefore, you will only receive a settlement of $25,000. You probably saved $100 in premium by being underinsured, but it now means you have to find a way to pay the additional $25,000 out of your pocket. Your lodge's insurance needs are no different than your own personal insurance. There is nothing terribly confusing about figuring out the replacement cost of your lodge building and the replacement cost of its contents. Insure them as close as possible to the values you come up with. Keep the cost down with higher deductibles. Make sure that you have chosen the quality coverage that realistically meets your needs. Determine if you have lodge exposures that exclude you from coverage under the Grand Lodge's general liability policy. And if so, buy the liability coverage with your property insurance. Obtain and read the Insurance Made Simple guide and use this valuable tool. Thank you for your time and for this opportunity.
Brother Ponytail, the floor is yours.
Just was wondering, in terms of liability, what our responsibility or if a policy has any coverage for an event, say like if we had a collation on the property and it turns out the food was bad, or in another instance, if people didn't properly follow protocols and somebody accidentally got, we ended up spreading COVID. Does the lodge become in a position of being liable?
So at the end of the day, the legal questions regarding liability are ultimately going to be determined in courts. I have not heard of any way that an organization could be sued because somebody caught COVID at an event. But with respect to whether it's blood drives or banquets or other events, if it is, it would be covered by the policy under the liability insurance. And if the policy includes products and completed operations, which most general liability policies do include, that would also cover your food poisoning question.
Thank you very much.
And just to follow that up a little bit more, as an attorney, I can tell you that is so long as the entity was not responsible for any negligence on the part of the injury, whether it's food poisoning or anything else, then the entity would not be responsible. It does not mean, unfortunately, that you still can't be sued, and that's the challenging part. So if you don't have the proper coverage in place, when you get sued, you have a lawyer, and you get the lawyer through your insurance company, and that's the benefit. So if you don't have the proper coverage in place, the danger is you're left struggling and defending these even a frivolous lawsuit, by yourself, and that's obviously a position you don't want to be in. I do see we have a couple more questions now. Brother Randy, Mesha, would you like to answer your question?
Certainly. Mine is not so much a question as it is just an additional comment. Just so everyone's aware of my background, I've spent the past 30 years of my life as an insurance registered representative, litigation claims adjuster, and property risk assessor. So I have a little background. I'm sorry if I was laughing during the presentation because so much of it was, to me, comical and common knowledge, and I realized how most people it's not. So great presentation, Robert. It was a wonderful put together presentation. One of the things I just wanted to point out to everybody as well is just to echo what Robert said is the example I have when I took over as the president of the district association. Our district, what I thought was our district liability policy, came due, and the premium had more than doubled. So my secretary questioned that. I said, well, let me have all the documents, including the actual policy, to review and figure out if I can figure out what's going on with it. Long story short, I got a hold of the policy, went through it, come to find out that over half the premium was going to pay for a dwelling fire aspect of the policy for a property that, unfortunately, we don't own the property. It's one of the Masonic temples in my district. How that got put in there, no one knows. It also, and Steve and Robert, you'll both especially enjoy this little part of it, it had an exclusion to the policy. The liability aspect of the policy carried the following exclusion: punitive damages exclusion. We do not pay for punitive, exemplary, or vindictive damages, period. For those of you that don't understand it, that's what you carry an insurance policy for, is to protect you against punitive damages. So I was kind of shocked by that. I'm actually having a copy of that endorsement framed and put in my office because I've never seen something as exclusive as that. So just, my thing is, go through your policies, talk to somebody who knows, contact myself, contact Robert, contact Steve, and go through it. Also, the other thing that I found out was that our policy, the insured entity of my district association, it's listed on the policy, is not the legal name of my district association, which, correct me if I'm wrong, gentlemen, that would completely void the policy, because I personally have written disclaimer and denial letters because of the fact that the policy is insuring someone who isn't entitled to be insured. And so you have to be very careful of that. If your district association or your lodge's legal entity name has to be the insured policyholder. If not, the company will simply return your premiums to you and thank you very much for your time and wash their hands of you. And you'll be left to handle the claim yourself directly. And as Steve said, pay the attorney's expenses as well.
What Brother Randy is obviously highlighting is exactly what Brother Robert was speaking about, and that is how important these issues are. They're not fun, they're not sexy, but once a year, those responsible for your lodge, for your district association, has to sit down, review these items, and if you don't know something that's in the insurance documents, reach out to your broker, reach out to someone for the answers, because what you don't know can hurt at the time that you need it. God forbid your lodge has a fire and the building's down. That's not when the time is to find out that you don't have the proper coverage. I can say that I really want to stress to everyone how wonderful Brother Robert's pamphlet is. It touches upon so many other different topics and areas that he really didn't even address tonight, such as what you should be looking at with respect to your valuable jewels or historical items that you have within your lodges. Those are kind of touchy questions about how much do you insure those items. Brother Robert, would you just briefly touch upon some of those? I know, many of the brothers here tonight have wonderful lodges, historical artifacts, and it's a question about how those should be insured separately or in particular.
Well, my lodge was warranted in 1768, and we are still using jewels that are 200 plus years old. At the end of the day, if something happens to those jewels, they're irreplaceable. There's nothing we can do to replace them. So one of the questions you end up having to deal with is, do you actually get them appraised and insure them for their value? Or do you just look up in the various catalogs to see what it just costs to buy really, really nice jewels today and make sure that you have enough coverage? Your policy in its basic forms will pay to replace your items with the same like, kind, and quality, but a new item. So if you have an antique, a high value item, a specialty item, the only way to properly insure that is to get appraisals and schedule them in your policy. So those become choices that you have to make. But either way, you should be sitting down with an inventory of your belongings and looking at what does it cost to just, if nothing else, buy a new version of that today. And you should be insuring your contents for that coverage. Same thing with your building. A lot of us have contractors in our lodges, or no contractors, or people in the real estate appraisal business that can do replacement cost appraisals. Seek out the people that that are in your lodge to look at that building, the square footage of the building, the type and style of construction. My building is the Albany Temple that Alan referred to earlier in downtown Albany. It's a huge building. It's a multi-million-dollar building. You just need to make sure that it's insured properly.
Does the name need to match? I guess you talk about the insurance policy, what's in the 990 form. So I guess the question that I think that Brother Randy raised, which was concerning, is the name of the insured entity. Is it matching the 990? Is it matching the formal lodge name? What should the insurance policy be listed under?
You could actually have both names on the policy. If the building is owned by one entity and the lodge meets in the building, one policy could technically insure both of those entities.
In fact, I would just even add to that. I know that, and I don't want everyone to rush and reach out to the Grand Lodge, insurance provider, the carrier, but because that covers you as long as you don't fit into the exclusions. But I know one lodge that just every year gets automatically their name added to the special edition, and they keep a copy for their own records just so they know that they have that. But to echo what Brother Robert just mentioned, that you couldn't have, and probably it's not even that, it'd be more money, multiple entities listed on the insurance policy. Is that correct, Brother Rob?
Correct. The other thing too is to keep in mind with the Grand Lodge policy is liability coverage only. It does not provide building coverage or contents coverage.
It would be ideal if every form of legal paper from your lodge or your district association has the same name on it. That would be wonderful, but unfortunately, so many of these lodges have been in existence for so long that things have changed, new things have come in, secretaries change, and things like this aren't pretty. They aren't fun. They don't get discussed very often, like Robert said, and they get overlooked and they get passed by. If it is a very close match, if it's obvious that it is the organization, then you've got a good leg to stand on. You've got a good argument to make. You may not have an airtight one, but you've got a good argument. If it is like in my districts association's situation, we have the district association. We also have a charities corporation, which are two separate legal entities. And the district association was paying for it, but the charitable organization was what was being covered by it. It was just a complete snafu. And we have now are going through the process of getting a new policy that would cover both for all the different entities that we exist under, for all the different activities we partake in, and also to, and Robert, I don't know if you want to touch this as well, but something to provide another aspect of the policy is an officers and directors and officers policy to protect myself as the president of the district association from any liability that I may be exposed to simply as the president. As Robert can attest, Steve, I know you can attest, if somebody gets sued, somebody gets hurt, everyone is getting sued. It doesn't matter what your connection to the organization is. We're all getting brought into the lawsuit, and the biggest protection there is the legal defense of paying the attorneys to protect us, to get us out of that situation.
Brother Bob, would you touch upon that? Officers insurance, I think that's a very good point that was just raised by Brother Randy.
That policy would be a directors and officers policy. So the directors of a group, whether it's 6 or 10 of them or whatever, are making the decisions for hundreds of people in the group. If a bunch of those people get together and decide to sue the directors because they're unhappy with the results of a decision they made, that's where the directors and officers coverage comes in. It's not a general liability suit. So it's a completely different policy.
Have you seen lodges actually get that form of insurance policy?
So I have not. And now I'm also going to plead ignorance with the benevolent orders laws, but doesn't that prevent, as long as you qualify for it, being sued as individuals?
That does, not for intentional torts, but for negligent torts. It does cover you under certain circumstances, yes. I don't necessarily know if it covers you for issues such as bad investing, but for liability lawsuits, yes. The benevolent orders law does cover you if, God forbid, someone trips in your lodge and then sues the lodge, as well as the officers. The officers would be covered and it could not be sued pursuant to the benevolent orders law.
Well, let me also say with the general liability, the Grand Lodge policy, besides covering the lodge, covers the members of the lodge. And if you buy your own insurance, you can also include the same thing, so that the general liability policy, besides covering the building, the location, and the lodge itself, will extend coverage to all of the members while in the course of pursuing lodge activities, such as you go to the VA hospital and visit patients in the hospital and an event occurs at the hospital.
I would like to actually call on Brother Richard Newton, who wanted to make a comment regarding the COVID liability question.
As district deputy of the Chautauqua district, I've had the opportunity I've had some lodges ask me some questions, and I've had some conversations with local and county health officials. If there is an outbreak and you have people renting your lodge, and there is an outbreak that is contact traced to your building, to that event, if you don't have specific safety plans in place or something written in your lease that lets the renters know that they're responsible for following the specific guidelines of the health department, you may not be held liable by a lawsuit, but you can be heavily fined, whether it's a couple hundred to a few $1,000s by the local and county health departments because of an event that happens at your place if you are not letting these folks know, and if you don't have some kind of a safety plan in place. So that's definitely something you want to keep in mind. I don't think that's something insurance is going to cover.
That's an excellent point, Brother Rich. And it's interesting because when the pandemic first hit, I actually had a number of conversations with brothers who are members of lodges that own their buildings, and they are the landlord, and they were concerned about whether or not if brothers got sick from another lodge, if they were then potentially liable. And of course, a lot of these issues are brand new because the pandemic is still relatively new. So a lot of these issues have not been addressed. Quite frankly, at the same time, I think that have been some laws that have been passed that have provided coverage or the inability to sue under certain circumstances with respect to the pandemic. But it's very complex, and I think that's still kind of an emerging law. But I think the point that Brother Rich makes is right on target. So these are things that everyone has to be concerned with, aware of, and mindful of in governing your lodges as landlords and even as a tenant.
Yeah, check with your local and county health departments to make sure what their rules are and get approval from them, because everybody's is going to be different depending on who's running it.
I see that we have one more question by Right Worship Brother Ponytail. Brother Ponytail, would you please give your official name?
Yes, it's Robert Remington, Royal Grata Daystar Lodge, 3rd Kings District, otherwise known as Right Worshipful Jack in the Box, because I keep on getting up again. My question regarding the 990 is, if you'll look on the IRS entities site, most lodges are listed as Grand Lodge of the State of New York. Then they have like a sub category of the lodge number. Sometimes it doesn't have that, and you have to look into the details in order to sort that out. I went through this issue with a bank at one point. They say, wait, you're Royal Grata Daystar Lodge number 647. Here it says you're Grand Lodge of the State of New York. That's the issue I'm talking about in terms of if the insurance policy, does it have to match what's on the 990?
I want to have actually Brother Robert address that, but I don't really think that 990 is the definitive answer. In fact, it's what you're talking about is lodges filing under the Grand Lodge number as opposed to applying individually. In fact, so most lodges are going to be under the Grand Lodge number, and that's why you're getting to that the circumstance you did. And quite frankly, I think it was just probably a bank that didn't really understand the nuances of what 990s are and our entities. But I think that the real point that was made by Brother Randy and affirmed by Robert, and that is whatever your named entity is must be on that policy. And so if you're a Royal Grata Daystar Lodge number such and such, that should be on the policy. And you can have multiple names on the policy, but that would provide you the surest way of guaranteeing your coverage. 990 issues are, I think, separate and apart. Would you agree with that, Brother Robert?
I would, yes.
I think that appears to be it. Wow, what a wonderful program from both Right Worship Brother Al and Right Worship Brother Bob. Thank you so much for really for all your kind words and remarks, as well as those brothers that asked questions and contributed their own experiences.